These 7 altcoins need to be avoided this week. The Federal Reserve has lost $100 billion this year, but it could be bullish for Bitcoin. Plus, Injective and Radiant Capital are about to have massive updates. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. Outflows from crypto exchange traded products, or ETPs, reached $455 million over the past 9 weeks, according to a report from asset manager CoinShares. Outflows from ETPs generally indicate negative sentiment towards cryptocurrencies. Crypto exchange traded products are designed to track crypto prices. When the shares of these funds fall below the target prices, they sell off cryptocurrencies, causing outflows. The week leading up to September 18th saw outflows of $54 million, capping off 9 weeks in which only a single week saw inflows. Bitcoin saw the largest drawdown from all exchange-traded products and was responsible for 85% of all outflows from these funds. Last week, over $45 million worth of Bitcoin was sold into the market by ETPs. Ether funds were not spared in the deluge of selling. They saw outflows of approximately $5 million last week. Despite these outflows, a few ETPs representing altcoins did well last week. Solana ETPs saw net inflows of $700,000, Cardano gained $430,000, and XRP gained $130,000. The U.S. Federal Reserve made a significant announcement on September 14th, revealing accumulated losses of $100 billion in 2023. What's more, the situation is expected to worsen for the Fed, according to Reuters. But for risk assets like Bitcoin, this actually may be a blessing in disguise. The primary reason behind this financial setback is the interest payments on the Fed's debt that have surpassed the earnings generated from its holdings and the services it provides to the financial sector. As a result of this development, investors are now scrambling to grasp how this will impact interest rates and the demand for provably scarce assets like Bitcoin. Some analysts are of the opinion that Fed losses, which commenced a year ago, could potentially double by 2024. The central bank categorizes these negative results as deferred assets, arguing that there is no immediate necessity to cover them. Historically, the Federal Reserve has been a profitable institution. However, the absence of profits does not hinder the central bank's ability to conduct monetary policy and achieve its objectives. The fact that the Fed's balance sheet has incurred losses isn't surprising, especially given the substantial interest rate hikes, which escalated from near zero in March 2022 to the current level of 5.25%. Even if interest rates remain unchanged, Reuters suggested that the Fed's losses are likely to persist for some time. This can be attributed to the expansionary measures implemented in 2020 and 2021 when the central bank aggressively acquired bonds to stave off a recession. Clearly, the situation is unsustainable, particularly considering that the U.S. debt has now reached $33 trillion. While one might point fingers at the Fed for raising interest rates initially, it is essential to recognize that without such measures, inflation would not have returned to 3.2%, and the cost of living would have continued to exert pressure on the economy. There remains a significant unanswered question regarding which sector or asset class will reap the most benefits when inflation catches up with the short-term treasury yields. This uncertainty arises as the S&P 500 stands at just 7% below its all-time high, while the real estate market exhibits signs of strain due to mortgage rates hitting their highest levels in over 2 decades. Presently, Bitcoin and other cryptocurrencies may not seem like a viable hedge option, but this perspective could shift as investors realize that the U.S. government's debt ceiling is essentially boundless. Thus, it might make sense to gradually accumulate these assets regardless of short-term price trends. The United States Securities and Exchange Commission has failed to win immediate access to Binance US software, with the judge saying he isn't inclined to allow the inspection at this time. The hearing was held on September 18th to discuss the SEC's motion to compel Binance to hand over detailed information and make its executives more available for depositions, which has been a point of contention between the two over the past week. In a hearing, the judge said that he wasn't inclined to allow the inspection at this time. Alternatively, he proposed that the SEC should come up with a more specific request for discovery and speak with a broader range of witnesses. The SEC has repeatedly claimed that it's been struggling to get information from Binance US since it sued the American arm of the crypto exchange, along with its international affiliate Binance Holdings Ltd. And CEO CZ on June 5th for its alleged involvement in the sale of unregistered securities. On September 15th, the SEC accused Binance US of non-cooperation in the investigation, with the regulator highlighting that Binance US's holding company, BAM Trading, has produced only 220 documents during the discovery process. The SEC said a large portion of these documents consist of unintelligible screenshots and documents without dates or signatures. The regulator added that BAM has refused to produce essential witnesses for deposition, instead agreeing to only 4 depositions of witnesses it deemed appropriate. However, Binance has previously characterized the SEC's repeated request for discovery as unduly burdensome. The judge's decision to deny the SEC immediate access to Binance US's software and other documentation is a partial setback for the regulator in its ongoing case against the exchange. The custody of Binance US customer assets is one of central concerns that the SEC has with the crypto exchange, with the regulator claiming that Binance US must be investigated more thoroughly to tease out potential links to the global arm of the exchange. Injective recently upgraded their tokenomics to 2.0, and DGen analysts on Twitter wrote a great thread talking about how this has the potential to surge INJ to over $100 by 2024 and 2025. He said, "This groundbreaking development has the power to greatly increase the weekly burning of INJ tokens. Get ready for supply shock." Now, all dApps on Injective can contribute to the INJ burn auction with a minimum of 60% to 100% of the fees they wish to burn. This enhances the on-chain economy powered by INJ, capturing value from all dApps such as lending platforms, NFT marketplaces, prediction apps, and more. INJ 2.0 is a milestone in finance, advancing digital money. Injective introduces true ultrasound money. Injective embracing inclusivity and adaptability. Injective empowers dApps to contribute to the auction burn, increasing community engagement and economic robustness. During weekly burn events, exchange dApps contribute 60% of their transaction fees to an auction basket. Community members could bid for the winnings, and payments made for the auction basket were promptly burned, reducing the token supply. This approach transformed transaction fees into a community-driven incentive, benefiting participants and Injective community members. Over 5.7 million, or 5.7% of the total supply, Injective has been permanently burned using this model. Since Injective is one of my favorite altcoins, I can't wait to see what it does in a bull run, and I could definitely see INJ over $100 in the next 2 years. RDNT aims to be an omni-chain money market where users can deposit any major asset on any major chain and borrow various supported assets across multiple chains, eliminating the need for silos of liquidity. RDNT's cross-chain interoperability functions using Layer 0 messaging and Stargate's stable router interface. For example, lenders may reclaim their collateral and can direct which chain to withdraw funds from and what percentage they'd like sent to each chain. Up until now, RDNT Capital has been on BNB and Arbitrum, but they've just announced their mainnet on Ethereum coming on October 3rd. They said on Twitter, despite the growth of Layer 2 solutions in 2023, Ethereum still holds $22 billion in total value locked, 5 times the combined value of Arbitrum and BNB chain. There are $70 billion in stablecoins on Ethereum, many of which are not utilized to generate yield or earn less than US Treasuries. ETH mainnet presents the most complex, competitive landscape for a new entrant in the DeFi space. Still, there is a significant opportunity for an improved incentive model to grab market share. However, it is important to note that the RDNT token is undergoing something on September 24th that could cause a price pullback. That would be a great long-term buy opportunity, which we'll get into in just a minute. This week, there are 7 tokens that you need to watch out for. 7 altcoins have massive token unlocks this week, where millions of dollars worth of tokens will be unlocked to early investors who more often than not want to sell and dump their tokens. The first coin you need to watch out for is Avalanche, with over $90 million in unlocks on September 21st. The next is XLPA on September 21st, with $16 million in unlocks. Then Aster with $7.3 million, which was yesterday and may still be getting sold. Next is Space ID on the 22nd with $4 million. FIDA on the 23rd with $4 million, Ribbon on the 24th with $3.74 million, and RDNT Capital on the 24th with $3.23 million. RDNT Capital is going to have a lot of manipulation with its token unlock in 5 days, and then the mainnet launch on October 3rd. So if you are looking to buy that one spot, any dips over the next week could be good, but if you're looking to trade it, be careful because it's sure to have a lot of volatility. That's it for Altcoin Muzzy's update. I'm your host, Cody Buffington. Thanks for watching.